And welcome to the VSA Capital Tech and Transitional Energy podcast, which we're recording a day late on Friday, the 24th of March, because I've been traveling. For regular listeners, you'll know that I've actually been in Dubai and also then in Kenya. Very interesting trips. Obviously, at VSA, we're always looking for two things, really. New pools of capital, because London has so few at the moment. And also new companies to act for, interesting deals, M&A deals, you name it. I'm a great believer, Phil, as you know, because I'm always saying to you lot as a team, ideas do not come out of the screen. You have to go and find them. You get on a plane, wear out some shoe leather. Dubai was fascinating, actually. I'll tell you why, because what amazing. I mean, it's a crazy place, by the way, absolutely crazy. And some of the buildings are just spectacular, but crazy as well. But, you know, it's a sort of little oasis in the middle of the world, which is, number one, run like a business rather than some of the sort of woke liberal governments in the West. If you work hard and are successful, they love you, and they'll let anybody in, by the way, as long as they work hard and are successful, and they'll let you keep all your money without paying any tax. They get their tax through consumption. If you don't work hard and you're just trying to go there for no reason at all because you fancy it, then they'll kick you out. I quite like that policy. But also, the other interesting thing is it's like a safe haven there. You know, there were Ukrainians there, there were Russians, they were mixing together. It's like this little bubble where you can be completely safe and where all geopolitical risks go away, because they're not going to confiscate your property because you're Russian and at war. They'll take the view that you bought it, it's yours. And it is this little safe sort of bubble. And you talk to people, and a lot of the reasons that people are there, it isn't, obviously they like the fact you don't pay tax, but it is this completely neutral geopolitical situation. It's like a Switzerland in the desert. But Switzerland, of course, is so dragged into the EU, it's not quite as neutral as it used to be. And actually, Switzerland has a rather weaker banking system as well, I suspect, obviously. But there you go. But anyway, that's what I was doing there. Nairobi, I mean, extraordinary place. There was a protest from the opposition government the first day I got there, so all my meetings were cancelled. And then I was actually visiting a gold mine, which has got nothing to do with tech and trans, so I won't bother to talk about it. But it was very interesting. Anyway, there's my little intro, Phil. How are you, Phil?
Very, very good. Oh, look, fascinating to hear about Dubai. Do you know, last time I was out there, Andrew, must have been 2002. How's that? But seeing one of the big investment funds, and I remember them telling me all about their plans for a stock exchange, for Palm Islands, and for a Formula One track. Who would have thought? That's how visionary they were. And
yeah, so, but the trouble is, Dubai, they do have a Dubai stock exchange. It really hasn't gone anywhere, actually. They don't have a Formula One because Abu Dhabi and Bahrain have got it.
That's it. Yeah.
And I mean, that's one of the interesting things about the Middle East. You've got actually Bahrain, you've got Abu Dhabi, you've got Dubai, you've got, I mean, Saudi Arabia is now starting to catch up as well. I tell you one other thing about Dubai. A lot of people forget. Do you know, I'll ask you a question. How much of their revenue, Dubai, do you think comes from oil, percentage-wise? GDP.
Right, okay, that's a great question, because when I was there, that's what they were planning around, is moving it from oil. So I'm going to say now 30%.
You'll get 30.
Yeah.
See, this is a perception that people have completely wrong with Dubai. I'll give you a clue. You're way too high. Have another guess.
Now, what, 15%?
1% only.
Good God. Wow. But I mean, that time I was there only 20 years ago, they were strategically looking to move away from oil. Wow, 1%. That's incredible.
They're now massive in, obviously a lot of trade goes through Dubai. Yeah. They have huge ports, DP ports. Yeah. The banking and financial industry has grown dramatically. Travel and tourism and all of that sort of thing. I mean, you have Emirates Airlines brings in an absolute fortune to them. But the whole of the Middle East, with all the hotels and everything, has got a real travel and tourism boom. It's one of the meetings I was attending whilst out there actually was one of the biggest Middle Eastern travel and leisure media companies. So yeah, look, it's very interesting. Anyway, look, we're here for tech and transitional energy. Although transitional energy is also very interesting to them out there, because obviously they have a huge amount of sun, but it isn't sunny at night. In fact, because they're close to the equator, the dawn and the dusk are pretty regular. And so they are also very interested in transitional energy and sort of long duration energy storage. It's an area they're taking a lot of interest in. And actually, fintech, again, is something that Dubai is really trying to build up on. to get themselves as a centre for fintech. So there is a relevance there too.
Oh yeah, definitely.
And look, in the meantime, the markets were bloody horrific whilst I was away. I mean, it's just I didn't miss a lot, did I? Because, and again, you may see the FTSE sometimes bouncing back up again, but take my word, down at the small end, the mid cap end, these markets are horrific. There is just no liquidity. It's not pleasant at all. Trying to get deals done is very, very difficult. I mean, the best deals we're seeing in the city at the moment are the brokers actually merging, like FinCap and Senkos. You can get those done because you can rip out a load of cost. But with UBS taking over Credit Suisse and firing a load of people, FinCap and Senkos will probably get rid of a few people where there's an overlap. There's going to be plenty of people around to come and work in the industry.
So there will be. It has been a bloody tough week. You are not kidding. But we've had some company results as well, and some of the relatively good news. And of course, we've seen the Bank of England move its interest rates, but being a bit more positive on the outlook for the economy, which is a good thing.
Yeah, I mean, look, on interest rates, I mean, I cycled in this morning, was listening to the Radio 5 Live and the business section of it, and people moaning that, their mortgage rate has gone up. I mean, they just forget, when you and I were young, Phil, which admittedly was quite a long time ago, I think, I remember interest rates at 12%. I mean, mortgage... Yeah. We've been living in this false world for too long, and the younger generation have got to realise, actually, our interest rates are not high. They're well below the long-term average. And you need to just adjust slightly. Of course, the problem is that property prices have gone through the roof, and so you need a bigger mortgage to buy your property than we did when we were young. And that obviously is one of the issues. But anyway, we must move on to tech and trends. Obviously, I've been away. I haven't really been following the markets as closely as you have. So why don't you kick off with what you're seeing, Phil, and I'll fill in and where I see any gaps.
All right.
But I probably won't be catching you out this week because I don't think I'll be able to.
Oh dear. Well, I'm not going to give you the opportunity if I can help it. Right. So quickly on to sort of long-term storage and subject we always cover in this broadcast. But there was some data out from a company called LCP Delta. And they produce what we call a store track report that they do on the market for storage. And they're saying European energy storage market hit an annual record in 2022 with 170 new grid battery storage projects, adding nearly 2 gigawatts of capacity. But they're saying that this year coming is going to be even more. And again, we talk a lot about this and why it is, and they're expecting 3.7 gigawatts of new capacity to become operational. Most of that is concentrated in Western Europe, and the markets in Britain and Ireland remain the largest. Most advanced, accounting for 56% of all projects. There you go. That's since 2018.
Sorry, but actually, one little thing whilst on energy storage. Since I've been back, I've had a lot of questions asked me, Andrew, why are people selling? Why are the big shareholders selling Invinity Energy Systems? Because we've had some TR1s which look as though they have been, which has got other people worried, so they've sold. No one has been selling. First of all, some people had to put out a TR1 because they were diluted in the recent issue we did. Doesn't mean to say it's been selling. It's just didn't pie in the issue. And the other one on Schroders, please be aware, anybody listening, that Schroders own a certain amount of stock, I think it's about 24% as Schroders, but they also manage another chunk of stock, which is run by Schroders, but isn't held as Schroders. And so the combined holding, they have not sold any stock at all, I can assure you. The TR1s are very misleading. It's a system that, everybody's saying you have to put out announcements that the market is not misled. The current way that RNSs and the TR1 system is regulated, unfortunately, creates a misleading situation. I shouldn't really say that. I'm sure the FCA would completely disagree with that, but it's reality. No one is selling. It's just simply changes from the fundraise. So the stock should bounce back up again. Anyway, sorry, carry on, Phil.
Okay. No. Thanks for clarifying that. I mean, that also occurs for other companies as well. It's not just Invinity Energy Systems when you see these announcements come out. So it's always well worth seeking clarification on them and what the movements in the holdings actually mean. But shifting on a gear and on to EV, electric vehicle technologies now and EVs. There was some news on Reuters on Ford, and Ford is clearly developing electric vehicles, and it was saying that the Model E generated an operating loss of $2 billion in 2022. So it's just highlighting the scale of investment that's going into EV development. We've already seen VW saying that they're investing something like 186 billion euros over a number of years developing its model range. So lots and lots of activity in this space, a lot of money going into it, and EV technologies, and this is something we at VSA follow very closely. We've got companies in the space, and there's a lot of activity in Europe in this whole area. So that was from Ford.
Yeah, I mean, the numbers you're seeing are enormous. These majors are just throwing money at some of these situations, and it's quite interesting. Obviously, we recently in January, feels like recent, but it was actually 2 months ago, raised some money and took on Equipmate, that's obviously heavily involved in the EV game and inverter game, and also replacing ICEs in buses with an EV. It's companies like that are really in demand by these big majors, because they just don't do these little things, so they have to go and acquire them or outsource to them. So I think what you're saying, these huge numbers, then you look at an Equipmate that's sitting there with a market cap, I don't know, about 50 million or something. You can see why somebody would look at that and go, God, you can solve all my problems. Anyway, that's just a small thing on Equipmate.
Mm-hmm. Yeah, that's a the space we're very closely involved with. Right, moving on to tech now, and in the technology space, we saw. It went through the COVID period, a big boom in cloud services. It was always growing rapidly, but it got drove harder through COVID, and IT investment in cloud and IT services. A statement from Accenture, which is listed, they lowered their revenue and profit forecasts, and they're cutting 2.5% of their workforce. Now, it's got such a huge workforce. This is 19,000 jobs that are going. And they're saying, well, here it's Reuters report saying it's the latest sign of worsening global economic outlook, sapping corporate spending on IT services. Well, look, job losses are awful, and for those that are impacted by the job cuts, but it's 2.5%. You kind of think, you can imagine there's an awful lot of recruitment's gone on in IT in the last 3 years as well. So you have to read these numbers very, very carefully and have that in perspective. But there was a Reuters survey of more than 1,000 IT decision makers in US-based enterprise technology, saying that they're planning to reduce their 2023 budget growth. But growth, and it's growth, it's not contraction. Its growth expectations are now 3.4%, down from 5.6% increase captured in October 2022. So again, an element of perspective needed with this kind of, that some of the news that were coming out, and I'm surprised. That's growth still expected of over 3%. Some inflationary now, of course, but nonetheless. So that's the wider IT news. And again, Andrew, we look a lot at and we comment on this. It really is important to see where spend is going in IT. Now, we've had some company news while you've been away, Andrew, and the first one is from Quixent. And ticker is QXT, 123 million market cap. We've covered this one before, we've commented on it. And they provide computing solutions into the gaming industry. Now, I can't say I'm a regular user of gaming machines. I don't know if you are, Andrew, but if you look at them and you see them, the tech in there is very sophisticated in terms of the games that they run. And so they're computer control. Quixent make the computers for these gaming machines, sit in casinos all over the globe. And they also make highly specialized rugged monitors that are used in control systems for things like TV studio equipment, but also industrial control. So, these are like touch interactive panels that are used for big control systems. And they reported their full year revenue, and they have said that the revenue increased by 38% to just under 120 million pounds. Gaming was up by 57% to 74 million, and Densitron, which is rugged screens, was up by 15% to 45.8 million. So contributing to that strong overall growth, and that fed down to their profits, which are up from 5.4 million to 10.2 million pounds. And just other things they've said, they saw strong order intake through 2022 with a book-to-bill ratio in excess of 1, i.e. it's positive. Gross margins recovering from supply chain disruption, stabilization in component pricing, and freight costs reducing. So as Quixent, I thought that was all pretty positive for them.
All sounds like very clever stuff, and way beyond my pay grade. I'll take your word. It all sounds good.
Right, putting the divvy up by 25% as well. Right, so there we
Oh.
go. So that's all good. Gamma Communications, Andrew.
Yeah, keep going.
Yeah, GAMA, billion market cap, and Gamma provide, well, it's communications, but they do what's called soft PBX. So this is a PBX is the telephone switching system that you'll find in your office that switches calls coming in between the phones across offices and enterprises. Most of those are hardware systems on computer servers and will sit in offices around wherever, but they're converting onto pure software solutions, what are called soft PBX. Gamma provide those. Gamma also provide what are called SIC trunks. These are high-speed networks that run into enterprises. SIP trunks, and I say enterprises, this is small businesses, medium-sized businesses, and large ones as well. But basically, it's a high-speed comms network and allows you to run things like video and like Teams. So anyway, so they're providing services to SMEs, mid-sized businesses, and larger, but across the UK and Europe. Now, they reported their full year results. Their revenue was up by 8% to 485 million. Gross margins of 51% on that. And I was looking more interesting at their cash flow. Their cash from operations was 99 million on revenues of just under 485 million. So overall growth in cash and equivalents of 87% from just under 50 million up to 93 million. So good positive cash flow on this one. The shares have been weak over time in the last 12 months, I think, Andrew, because they'd seen weaker business in Europe. But they said here that the European side of things grew by 1% to 73 million on that overall 485 million. And they're starting to see, increasing cloud PBX adoption, but slower than forecast. But the UK saw very strong growth by 10% up to 115 million. So I thought just generally, the profit was down slightly, but they took an exceptional item. So the profit was down 65 million, but an exceptional item of 12.5 million in there. So that had an impact. So overall, I think that looks like an improving situation for Gamma Communications, and it's on an EV revenue of 1.9 times and 10.6 times EV EBIT, so not overly demanding and generating a lot of cash.
It's on a PE of 22 times.
That's a little
Depends
bit
which one you want to look. I mean, what's interesting, I mean, as you say, it looks interesting. It's been pretty flat for the last year or so at about £11, 12 pounds, peaked at £24.
Yeah.
Obviously, a lot of tech stocks are well underwater at the moment, but yeah, okay, fair enough. But as you say, I love strong cash flow, and I'm sure you're going to mention later a company that has results that had terrible cash flow in my view, but I'll talk about that when we get to it, assuming you do get to it.
I think I know which one it is. Right, in which case I'll move on very swiftly. Bytes Technology Group, BYIT is a ticker, 915 million market cap. Trading update, they're IT services. So they provide, let's say, cloud security products, but basically, if you're a big corporation, you need your software that you need, security software that you need, management systems, and they provide all of this. These IT services, software licensing, software asset management, all sorts of IT services in there. And they had said that they have probably trading update, so delivered strong sales and profit growth, anticipated cash conversion, expect to be around 85%, cash balances of 73 million, and here we go. Yeah, gross profit, adjusted operating profit full year, 20% up on the prior year, and they're seeing, so remember we commented on Accenture and cloud services and IT services, they're seeing 20% growth and very strong demand for software and IT services, corporate and public sector clients too. And I've just said last set of results were the interims, and the interims to August end, they had operating profits up by just under 18% to 27.3 million, revenue of 93.5 million. They got cash of 38.5, and they paid, this was after payments of dividends of nearly 30 million. So, again, there's cash. We're looking at this cash generation situation, but also growth in IT services there. Well, that is that, and just conscious of time here, Andrew, one more, and this is a smaller one. SRT Marine, ticker is SORA, 68 million market cap, trading update. And SRT Marine provide its automatic identification systems. Anyone that owns a boat will know about AIS. AIS goes on to all sorts of private boats, but also bigger ships used all around the globe. It's a satellite identification system, says where vessels are. Very, very important for tracking vessels, and particularly for search and rescue. They're expecting revenues for the year to March to be £30 million, more than double the prior year, an EBIT profit of 2.5 million. And they have said that results low. So yeah, systems business generate revenues of 18 million. Versus okay, and they're saying this results are lower than market expectations for the current year, and that is due to a project with milestones being moved beyond the year, so not cancelled but moved. And it's also announced that it's got a letter of intent for a new ghost car project worth 145 million. So I think that has helped the shares to bounce back a. Okay, so that is it from me. So, Andrew, getting on to the company that...
I was about to say, you've got to do the one that had 70 million of cash flow out of it.
Ceres Power?
Correct, yeah, well done.
Thank you very much. Yes, Ceres Power, CWR's digger, 676 million market cap, fuel cells and electrolyzers for hydrogen, and it was their full year results. So, Andrew, go for it.
No, you can do it. It's fine.
Okay, well, their full year results show that their revenue was £22.1 million, and in 2021, 30.8 million. Bear in mind, the market cap, £676 million. Anyway, they say that's in line with previous guidance. They had a gross profit of 13.1 million on those sales of 22.1 million, and a loss of 45 million pounds. And their cash reduced from just under 250 million pounds at 2021 close to 182 million. So a big cash outflow. And why was that? Most of it is pouring into R&D still on the fuel cells business. So their R&D increased by 48% to 29 million pounds on that. They're also investing very heavily in their solid oxide electrolyzer tech, and they said that they plan to invest 100 million pounds in development of that. And they're 2 years along this journey, quote. So there.
I think it's just a reminder. I mean, the one thing that Ceres does have is a fantastic corporate structure with Bosch and Wanchai, and yes, that is basically what is saving them. The cost of developing these fuel cells, batteries, whatever you name it, I mean, it's huge. You need the right partners and corporate structure to be able to get through it if you're going to be a small UK company. Without them, you will fail. Anyway. That's enough, as you say. So that's covered everything, and we've done that actually in not too bad time, I think. Hopefully next week I'll have more to contribute, Phil.
Well, you usually do, Andrew. So, but you've been away, so no problem at all.
Very good. As usual, at the end of all this, anybody's got anything that they disagree with us, please let us know. If anybody's got anything you want us to talk about, please let us know. If anybody just wants to send us a check, let us know. Or sponsor us. Wouldn't it be nice if we were maybe sponsored by Heineken 00, podcasters that do it alcohol free. Anyway, that's enough of that. Speak to you next week, Phil.
Will do, Andrew. Look forward to it.